ones. This week we are starting with a new accounting section called the General Ledger, and we are going to take it very slowly. So this is just an introduction lesson to the General Ledger. The General Ledger is a record keeping system or a way of keeping track of financial transactions in a business, but it is special because it's based on what we call the double entry rule. So in the general ledger, every single account is divided into two sides, and every account will look like a T, like this. And we call the left-hand side of the T account the debit side, and the right-hand side of the T account the credit side. Now, the double entry rule says that every transaction will affect two accounts. Okay, so one of the accounts will be debited. In other words, one of the accounts will be affected on the left side of the T, and the other account will be credited or affected on the right side of the T. And these two accounts that go together are called contra accounts. This is not something that is entirely new to you. In the beginning of the year, or just when lockdown started, we did a bit of transaction analysis in your textbook. You can go back to that. It's on pages 35 to 39. And for every transaction, we listed the two accounts that were affected. Now, we just add a step. You must be able to identify and record which account is debited or affected on the left and which one is credited or affected on the right. This might sound crazy and you might not know how to do it, but I'm going to show you a very easy way to remember which accounts must be debited and which ones must be credited. We use a cool acronym or a little rhyme called DEAD and CLIck to help us to determine the debits and the credits. And we say that the D of DEAD stands for debit. In other words, all of the accounts that are part of DEAD increases on the debit side or the left-hand side. And the C of CLIck stands for credit. In other words, all of the accounts that are part of CLIck increases on the right-hand side. So it works like this. If the account is classified as one of the dead accounts, it increases on the debit side. The dead accounts are expenses. The A of dead refers to assets, and the D of dead refers to drawings. And then if the account is classified as one of the CLIck accounts, it increases on the credit side. The L of CLIck refers to liabilities, the I refers to income accounts, and the C refers to capital. Now, something that is very important is that if an account increases on one side, okay, so all the dead accounts increases on the debit side, then they will decrease on the opposite side. Okay, in other words, expenses increase on the debit side but decrease on the credit side. Same with assets, same with drawings. And then with the CLIck accounts, if they increase on the credit side, then whenever they decrease, it will happen on the debit side. For example, liabilities will increase on the credit side, but the moment when we decrease the liability, we will debit that liability. Everything that I've said now will make more sense once we look at some examples. It is very important that you know the type of accounts you are working with, because you can't apply dead and click if you cannot classify your accounts. Okay, so I want to remind you that there's a little cheat sheet in the back cover of your book that has a summary of all of the accounts and their classes. And whenever you get stuck, don't guess, page to the back of your book and check whether you've got the class of the account correctly. Then it's easy to apply dead and click. Okay, so what do you need to do this week? This week, you need to be able to read a transaction and first of all, identify the two accounts that are affected. Then, based on dead and click, identify the account that will be debited and identify the account that will be credited. And then you need to be able to complete a set of T accounts. Okay, I just gave you a little tip at the bottom there. There will always be one debit and one credit. You can't have two debits, you can't have two credits, and there will not be more than two accounts for every transaction. Okay, so we are going to look at some examples in your textbook, and we are going to start on page 116. You can page to page 116 if you want, or you can just look at the examples and at the video. The first example on page 116 said the owner made a capital contribution of 50,000 Rand. Okay, now remember, whenever the owner makes a capital contribution, the two accounts that are affected is bank and capital. Remember in Form 1 we said that bank is always one of the two accounts that are affected. Okay, so you know it's always bank, and then when you read the transaction, you just determine which other account is affected. So if the owner added capital, obviously it's bank and capital. Then you have to identify the account that is debited. So you look at dead and click. Bank is an asset, and now bank increased because the owner added money to the business. Therefore, bank is debited because assets form the A of dead. Capital is part of click. You'll see on click, it's the last account, it's the last C of click, and therefore capital is credited. I gave you a little tip there in the middle that says whenever the business earns money, bank is always debited. Okay, so you can make notes for yourself. Remember, bank is always one of the two accounts, and if bank increases, if the business earns money, then bank is the debit. And if you know that, then it's so easy to figure out what the credit is. It's the other account. Now, when you complete the set of T accounts, it looks like this. So you've got your two T accounts. You've got the bank account and the capital account. And we said that bank is debited. So on the left-hand side, remember debit is the left-hand side of bank, you write something, and capital was credited. So on the right-hand side of capital, you write something. Okay. What you write is the name of the other account and the amount. Okay, so I said there to you, on the inside of each account, you write the name of the other account. You don't write bank in bank. You write here that for this transaction, bank is affected, yes, but the account that goes with bank is capital. And then in capital, you say the account that goes with capital is bank. And by doing that, it links the two with each other. Okay, let's look at the next example. The next example said the owner drew 800 Rand for personal use. So we have to identify the two accounts. We know that bank is always one of the two accounts. And remember, whenever the owner takes something for himself, it's drawings. So we've got bank and drawings. You will notice that drawings is the D of dead. And in this case, drawings increases because now the owner took more money for himself. So the account that is debited is drawings. Bank is credited, and the reason why is because bank is an asset, yes, so it's part of debt, but now the owner took money from the business bank account, so our bank value decreases, and because it decreases, it is credited. Okay, so I gave you a tip there. Whenever the business loses or spends money, we can't debit bank because bank doesn't increase, it decreases, and accounts always decrease on the opposite side. Okay, so bank is then credited. Now your T accounts will look like this. We will work on the credit side of bank. I actually made some plus and minus signs for you that says, according to date, bank increases on the debit side, but we know that if it increases on the debit side, it decreases on the credit side, and now bank decreased, so we must work on the credit side or the right-hand side of bank. Drawings increased on the debit side, so we work on the left-hand side of drawings. And remember, in every account, you write the other account's name. So in bank, we wrote drawings. In drawings, we wrote bank, and you write the value. Then I just say to you, remember, if one side of the account is positive based on dead and click, then the other side is negative. And I would recommend that you always make your plus and minus signs at the top of each account. It just helps you to do the recording in the T accounts. Next example. We bought a vehicle for 35,000 Rand. Now the two accounts that are affected is bank and vehicles. Both of these accounts are assets, and that's not wrong. We can have two assets that are affected. Okay, we just have to ask ourselves which asset increases, that's the one that will be debited, and the asset that decreases is the one that will be credited. In this case, we bought a vehicle. So because vehicles increases, vehicles are debited, and we spent money, so bank decreased. And remember I said to you before that whenever bank decreases, bank is credited. The two T accounts will now look like this. And then I gave you a little tip. It's always easy if you know what happens to bank, then it's easy to figure out what happens to the other account, because you must always have a debit and a credit. So you know whenever you spend money, we'll work on the credit side or the right hand side of bank. And then obviously whatever the other account is, we must work on the left hand side or the debit side. Remember, in every account, you write the other account's name and the value. Then example 4.1, services rendered for 500 Rand. The two accounts that are affected are bank and current income. Please remember that the account that is associated with services rendered is called current income, and it's an owner's equity income account. Now, in this transaction, we earned money, so our bank increases. And I say to you, whenever bank increases, it's an asset. It increases on the debit side. So bank is your debit. And you will see when you look at debt and click, income accounts are the I of click. So current income is credited because we earn more money and it increases on the credit side. Now your T accounts will look like this. We are working on the left-hand side of bank again because we earned money, so bank increases on the left. And if you know what happens to bank, you know what happens to current income. Current income is then affected on the opposite side, the credit side or the right-hand side. And please remember to write the name of the other account in each account. So in bank, you write current income. In current income, you write bank and you write the value. Next example, you would have seen we skipped 4.2. There's a very good reason for that. We'll come back to that later. Okay, example 5.1. If we pay for stationery, then the two accounts are bank and stationery. Stationery is an owner's equity expense. In this case, we paid, so bank decreases. And we know that bank decreases on the credit side. So stationery is the debit. And the reason why is because expenses increase on the debit side. And I say to you here that the total stationery the business bought is now more. Okay, so in other words, our total expense for stationery increases, and that happens on the debit side. Bank is credited because we know whenever we spend money, bank is credited. two T accounts will look like this. Bank is on the minus side, the credit side, because we spent money, and stationery is on the opposite side, the debit side, because our expense is now more. And then the last example, we paid for fuel for 150 Rand. So the two accounts that are affected is bank and fuel. It's exactly the same as with stationery because fuel is an expense. So the expense is now more, the fuel, and is therefore debited. And because we spent money, bank decreases because the total amount of money we have in the bank decreases, and that happens on the credit side. So your two T accounts will look like this. Bank is on the side where it decreases, the credit side because we spent money, and fuel is debited because our total expense is more, and that happens on the debit side. I just gave you that tip again. It helps if you know what happens to bank, because then whatever the other account is, even if you might be a little bit confused, you know that it must be on the opposite side to bank. And that's it. If you didn't understand what happened, I would encourage that you watch this video again and again and again to try to understand. Don't stress, we will go through this thoroughly in class. But for this week, I want you to do the T accounts for the transactions 2, 3, and 4 on page 118. Please leave the sales one, number 5, and then complete transactions number 1 to 6 on page 121.